My name is Katie. I am a remote online notary in the state of Florida, and I have Navi here. He is going to talk to us about taxes and then just all things about notaries. So, welcome and thank you for coming on.
Thanks so much for having me, Katie.
So, if I could have you talk a little bit about your business,
Sure.
and then
So essentially, the quick version of what I do is just I try to save entrepreneurs thousands of dollars in taxes. And it's not a
Mhm.
one time, just like upfront tax savings, but essentially this tax savings happens year after year as the business owner is, running their business year after year after year. So that's a very short version of what I do.
Okay, and then we actually connected. I did some email marketing towards you, and then you gave me some really good advice as far as using YouTube or using social media to basically market my business, which here we are.
Yeah.
Um,
I
yeah. So you use social media and YouTube for your own business. How have you found that to work?
I think it's amazing. If you are a new entrepreneur or even a seasoned entrepreneur, you should definitely, you probably know it's like cliche to say it at this point that you need to be on social media.
Mhm.
But specifically for me, I found it very helpful because I just go on YouTube in particular, sort of like my main platform, and I educate there. And I can see a notary doing that as well, going on to YouTube, answering questions that they receive most commonly. And people will end up searching for those same terms, and your video will pop up, and viewers end up watching your video, building rapport with you, believe it or not, even though they're just watching something you recorded months or years ago. And then when they need your service, you're the first person that they contact. And so I just think it's quite honestly, it's silly not to do it, especially with remote notaries, knowing that you can service people throughout the entire nation and not just limited to, someone that's in this 20 square mile radius of your residence. Like you have to do it.
I agree, but I do think that that has been one of the biggest differences within my own business or anything like that. As silly as I do feel doing the YouTube videos and everything like that. So, how have you seen it kind of change your business?
I'm probably unique in the sense that I didn't have a pre-social media stage. So like when I started my business, this is how I marketed myself. And if I'm being 100% transparent with you here, which I always will be, but what I mean by that in particular is basically I started creating YouTube videos
Mhm.
as a way to confirm my own knowledge, right? I don't know if you've heard this expression before, but I've learned this expression that you learn when you teach. Okay. And so what I mean by that is like, yeah, you might think you know what you're talking about, but if you have the confidence to create a YouTube video that potentially the world could watch, you want to make sure that you know what you're talking about. Right. And so you'll find yourself being extremely prepared for the content that you're going to be talking about. And I didn't realize it at the time, but I was just trying to educate people. I had no idea that it would be the sole source of my revenue generation, if you will, meaning that's where I get all my clients from. Yes, there's some word of mouth, but over 90% of my business comes from people watching my content on social media.
Mhm. Well, yeah, I mean, to that fact, you were at the top of my mind when I thought about, asking someone to talk about taxes, and it was because of your follow-up, obviously, but then also your YouTube because I was like, "Okay, I know that you can talk well on camera. You know what you're talking about because, I looked over some of your videos and everything." So it builds authority without you even having to basically talk to me at all. So
Yeah, it's really amazing. I've had prospects reach out to me, and I put
Mhm.
prospect in quotes because like I've had people contact me and say, where do I sign, so to speak? So like where traditionally you need to kind of go through your sales process, tell me about yourself, all that rapport building stuff that you need to do.
Mhm.
Obviously 100% still important, and I recommend not skipping over it and still doing it. But you'll find that your client or your future client or current prospect will skip past all of that because they're already sold because they feel like they know your business. It's, let's say, it's the equivalent of reading every single Google review that has ever been made about you and then concluding, okay, this is a 5-star person that I want to get in front of and have them help me with this service.
Mhm. Yeah. Yeah, it has been a little bit interesting to have people say like, "Oh, I feel like I know you." And then, sometimes I don't know them at all. And so it's
Yeah.
like that has been a little bit of an interesting aspect of this, but it's obviously been very worthwhile. So, to get into it, we were talking a little bit about this beforehand, but for the people that are just starting out as their notary business, what are some of the tips that you would recommend when they're first starting out for taxes?
So it can be overwhelming, right? And
Mhm.
even I acknowledge that, given I've been in the field for X amount of years, I still recall what it was like, that first year when you're like, I have no idea what I'm doing.
So, if you're just starting out, do you recommend someone to start out with an LLC or an S corp? Because that would be
Got
those are
it. Yeah.
yeah.
That is unfortunately an it depends answer.
Mhm,
Um, what I would tell you, and I know some of these things might sound like a plug, but I don't mean them to be a plug. Like, go to my YouTube channel. It's very simple. It's essentially my name, Navi Maraj CPA. And I've
mhm,
got quite a few videos that are, some of them are like 10 minutes, some of them are like 30 minutes. So if you really want to know the weeds and get into the details, check those videos out. The answer to your question is unique for a notary. So
mhm,
the only reason that you want to have your business taxed as an S corporation is
mhm,
to save money in self-employment taxes. If you don't know what that term is, self-employment taxes is essentially Social Security and Medicare taxes. And if you don't know how much, what rate, what tax rate that is, it's
mhm,
15.3%. So to
mhm,
use easy numbers, if you had a business that generated $100,000 in profit, you would have to pay $15,300 in self-employment tax. Okay. So to avoid doing that, you might establish an S corporation. An S corporation allows you to take that $100,000 of profit and split it into two buckets. One bucket, let's just call it your salary bucket, and the other bucket would be what we would refer to as your distributions. And so
mhm,
you might determine that you want to pay yourself $40,000 in a salary and 60,000 via distributions. Well, the reason why I'm explaining all of this to you is because that $60,000 is no longer subject to the self-employment taxes, the 15.3%. So this is a very quick and dirty explanation of this, but if you want to calculate your tax savings in our scenario just now, you take the 60,000, the amount you
mhm.
would take as a distribution, and multiply it by about 15% to get your potential tax savings. Now, I want your viewers to be very cautious here. Notaries are unique in the sense that notary income is not subject to self-employment taxes at all. And this is like an IRS rule. This is not something, Navi Mirage just made up.
Yeah.
So you actually, as a notary, if that's the main service that you're providing, I wouldn't recommend becoming an S corp at all. And I can guarantee you, there's unfortunately thousands of YouTube videos out there and other blog articles that promote the S corporation, and a
Mhm,
novice entrepreneur won't know that notary services aren't subject to self-employment tax, and they'll do the S corporation thing, and little do they know they're actually causing them or costing themselves thousands of dollars in just like tax prep fees and payroll fees that they don't really need to incur. So I'll pause there because I'm sure that was a lot of information, but feel free to double click on something I just said if you wanted to me to unpack it further.
yeah, and I'll leave all of your information in the description box below and everything like that, so that way we can find out more because that's super interesting because I do see in the forums that there's a ton of people that are like, "I just went with an S corp so that way I could save," and, there's not I feel like we're such a small kind of group. Like we're a huge group, but there's not that many people that specifically cater to notaries. Like if I bring up the fact that I'm a notary to a good amount of different people, they have no idea that
Yeah.
this is even a career. So I'm glad
Right.
that you
And likewise, if I may piggyback on that,
yeah.
I could guarantee you if you poll tax professionals who prepare tax returns for their clients, if you ask them, is the notary income subject to self-employment tax? They'll say, yeah, of course it is. Why would there be this special exclusion? I mean, there's only I think like two or three industries that don't have to pay self-employment tax. So this is a very unique thing. So be happy that this is the case here with this.
So
And
is
sorry, one more thing I would add is like when you watch a generic YouTube video, generally they're not just catering to creating like an S corp video for notaries, right?
mhm,
Like so you're never going to read this anywhere on a blog or see it on a YouTube video because no one's really making a video out there unique to the notary industry.
Yeah. That's for the entire country, not just like something that's state specific.
That's correct. That's a federal rule.
Oh, okay,
Yeah.
cool. Perfect. Yeah, because I know that everybody is going to have that question because usually
Yeah.
that a bunch of our laws are very state specific, so that we have to follow. But that's good. So
Yeah.
the other thing that I
While
wanted
we're
to,
on this topic, Katie, I'm so
yeah,
sorry, but I
no, you're
think it
fine.
would be important to mention here is let's say you have a notary who does other business services. Well, and if this if this was a question you have already, we can wait. But if not, let's hit it now. Okay, so let's use my example again of $100,000. Okay,
Mhm,
so maybe that's their total income. Maybe 40,000 of it is notary services that they're providing, but $60,000 is other services. Maybe they have other side hustles or whatever that they do, and their
mhm,
total income is around 100K. Well, in that scenario, an S corp might make sense. And so I don't know. I haven't really done detailed research on this, but
mhm,
as a what I would envision happening is like maybe $100,000 of income funnels through the S corporation. So it comes into the S corporation, but
mhm,
then there might be, and I know I'm getting in the weeds here, but there might be a fee that's charged by the S corporation that goes to the notary, a separate notary service business where this income is no longer subject to self-employment tax because it's not supposed to be subject to self-employment tax, right?
mhm.
And so then you can have your S corp over here, which really just brings in your $60,000 of other income that you achieve. I mean, another way to accomplish this is to have sort of like two totally
Structured
distinct
two different.
businesses, right? So like this is all your notary income, and then this is everything else. Many different ways to approach this.
So, do you see a lot of people that kind of like, let's say you have a fingerprinting business and then you have a notary business and then all of these other things? What I see a lot of the times is that people kind of just funnel it all into one and then they just put that all on their taxes under one specific thing, like a notary. Like, is that a good thing to do, or do you think that you would structure it a little bit differently?
I think that would be case by case, and there's like nuance to the answer.
Hmm.
So, as a general rule of thumb, it's okay if you have like ABC LLC and you're
Hmm.
doing multiple services and it's all going on one, what's called Schedule C, like so one place on your tax return.
Hmm.
In general, what you'll describe your business as doing is like whatever component is making up the most revenue
Okay.
on the tax form, you'll just say notary services if that was the bulk of your revenue. But another way to approach that question would be kind of what I was alluding to a moment ago, which is like, let's say you have one S corporation and all the money's coming in there. Is that a good or a bad thing? It's not necessarily a bad thing, but like I said, where I'm going with this is like, I can guarantee you most tax professionals aren't aware of the notary income being exempt from self-employment tax. So what's likely happening is that tax professional, by putting it all into one S corporation, is subjecting all of the income to self-employment tax when only the non-notary income needs to be subject to self-employment tax. Unpacking this on a call like this would be tough without visuals and things like this,
Hmm.
but that's my sort of like generic general answer. But
Hmm.
essentially, if you're watching this and you're like, this is a little bit beyond my head. I don't quite understand what Navi is saying here. That's totally normal and to be expected. The takeaway should be, hey, my notary income is not subject to self-employment tax. Let me
Hmm.
make sure my tax professional is aware of this so that we can structure my business accordingly.
And then, so we were talking a little bit about this before, but you have a specific link that I'm going to link below as well, just so that way they can bring it to their tax professional and just say, hey, I watched this YouTube video and this is what this person said. Can you look into it? And then just basically, would they go from there?
Yeah,
Um,
I would say we'll put the IRS link in the description below so people can see it and they have evidence. And I'm sure when they send it to their tax preparer, they're gonna be like, oh my gosh,
yeah.
we made a mistake for the past few years preparing your return.
If there is a mistake like that, would they be able to go back to the IRS and be like, "Hey, this was actually notary stuff and it shouldn't have been taxed and I should get this money?" Or are they just kind
Yeah, I
of
mean, I think at that point, your tax pro will have to discuss it with you and
okay.
decide, hey, for me to I don't really know. If the tax pro is going to take ownership and be like, you know what, I should have known this and I didn't, therefore I'm not going to charge you extra to what's called amend your tax return,
Mhm,
then then I would say do the calculation and determine the risk reward if it's worth amending your return. In
mhm,
general, like tax professionals don't like amending returns because they are a little bit more scrutinized and subject to audit, but
mhm.
that's like a general theme. If you're doing something that is proper by amending your return and making it like more accurate, if you will, it shouldn't be a problem.
That makes sense. Yeah, I know. And I will be the first to tell you that taxes are not my forte as far as knowing everything, but I did do a extension and I followed along with your video. So yes, obviously
Okay,
you're
cool.
yeah. So I was like, okay, this is perfect. So I'll have something to talk about. Yeah. So I didn't have everything kind of sorted out and I wanted to see how I wanted to structure like for next year. So yeah, I followed along on your video, but like obviously they're useful. So, thank you for doing that and
Yeah,
putting this information out there because people
you're
use it all
absolutely
the
welcome. And another thing, Katie, that I'll mention along with the extension sort of thing is when people elect to become an S corporation that first year, a
time.
lot of times what happens is they don't realize that their tax return is actually due on March 15th,
Mhm.
April 15th, because your whole entire life you've been filing a tax return by April 15th, right?
Yeah,
The moment you create an S corporation, your S corp return is now due on March 15th, so a month prior. And it catches a lot of new entrepreneurs by surprise.
yeah.
And what happens is you have to pay, I think it's roughly $200 a month or part
Mhm.
of a month that you're late on filing that S corp return. So usually the entrepreneur doesn't figure it out until like May or something like this. And so there's part of March, part of April, part of May. And so it's a $600 fee from the IRS over something silly where you could have just filed an extension. Had you
Yeah,
known, you could have
yeah.
filed an extension and given yourself 6 more months to prepare that return.
What? That's
Yeah.
crazy. I mean, I don't have I don't have an escort, but that is I've never heard of that, and I always, like, mark everything as far as, like, April 15th because that's the same as, like, individual taxes and, my whole life, it's been April 15th.
Yeah, this will
Um
blindside you. If you're only watching YouTube videos or using a third-party service, who I'm not going to name one because I'm not going to talk bad about one per se, but if you're
Mhm.
using a third-party service who's creating this LLC and doing this S corp election for you, you're relying on them to notify you of this, which they might have a blurb that says, "Hey, this tax return is due March 15th." Otherwise, you're not going to know.
Yeah. Huh, interesting. I also didn't know that. That's sometimes the thing about like taxes is that there's so many nuances that you would never have imagined that it's
Right.
it is
And when you're in your first year,
mhm,
taxes are like 5% of your brain capacity or where your where your capacity should be dealing with,
mhm,
right? You should be focused on like being an expert at your skill set
mhm,
or becoming a better marketing person to get more clients into your business. So I understand it. Like taxes, you're not worried about this until way after the fact.
yeah,
Um, Having said that, a lot of new or good entrepreneurs know there's like stuff they've heard of things. There's strategies, there's entity types, and all this stuff, so they
mhm,
do some research in the beginning, but it's nuts. If you do one search on Google or on YouTube, like you're going to get so many different results. And that's when the entrepreneur, especially the new entrepreneur, gets fed up because they read conflicting information.
mhm. Yeah. I mean, that's why as soon as I saw that you had a YouTube about the tax extension, I was like, okay, cool. I don't have to keep searching. Like I'm just gonna do this and it's gonna be fine. So my next question, and I just kind of started doing this for my own, is keeping everything in one place through QuickBooks. Do you kind of think
Yeah.
that that's a good idea, or do you have a different software that you would like more?
So I think the gold standard is basically QuickBooks Online. There's other companies too. Xero, I think that's spelled Xero, is another one of them.
Hmm.
But most tax professionals and bookkeepers use QuickBooks Online.
Hmm.
Uh, And I will say that there is something called QuickBooks Self-Employed. It's a little bit less, let's call it $10 less a month, but I would really encourage you to use like the next best service. I forgot what it's called. I think it's just called QuickBooks Online or
Hmm.
something like
I think so.
that.
Yeah.
Yeah, instead of QuickBooks Self-Employed. There's a reason for that. It's probably too much to get into here on a video like this. The short version is QuickBooks Self-Employed is not really like great accounting software. For
Hmm.
example, there's not something on there called a balance sheet. So it does not record like what your assets are, your liabilities are, or your equity is. And so you really just have no clue. It's honestly like one step up from using a spreadsheet. Your
Hmm.
best bet is to use like the full QuickBooks Online software to actually have proper accounting software. At least that's my opinion.
Yeah, no, I would agree with that because I'm super frugal when it comes to business and everything like that, and I opted to do the nicer version of like the QuickBooks because otherwise I don't want to deal with spreadsheets and
Yeah, I'm looking
yeah,
at it online right now, and just
yeah.
for the viewers, like so that they know, like use Simple Start, QuickBooks Online Simple Start
Hmm.
versus QuickBooks Online Self-Employed.
Okay, cool. And then we can put that on the I think we can put that on the screen and everything like that. I'll just
Yeah, I'm sure.
yeah, yeah, yeah. But after this, do you know anything about paying your like most of the demographic of the people that I work with have children. And so I have been reading about basically paying your child to be able to kind of set them up for success, but then also lessen your taxes. Do
Yeah.
you know anything about that? Is that something that you
Sure. Yeah,
okay.
absolutely. I think more broader, we should talk a little bit tax strategy stuff as
Okay.
well.
Yeah.
So, and we'll hit hiring your children as part of that.
Okay.
So, what I first like to do with like brand new entrepreneurs is like, hey, it doesn't make sense right now for you to go pay for things you don't need to try to get a tax deduction. Right now, let's just get like the most tax savings we can
Hmm.
by converting expenses that would normally be personal expenses and not tax deductible, and converting as many of those into business expenses that we can get a tax deduction for. So the
Hmm.
four main ones that come to mind regarding sort of these personal expenses that can be converted are a home office deduction, your auto, your cell phone, and your home internet.
Hmm.
So we can unpack any of those that if you wish, but basically, if you're using a portion of your home exclusively for business, you can get a home office deduction. And that home office deduction could be what's called a simplified method, where essentially you're getting $5 per square foot of your home used for home office and up to a maximum of 300 square feet. So if your home office was greater than 300 square feet, you wouldn't want to use that. Or you can use the actual method. And so with the actual method, you can get a deduction for a portion of your utilities, your water, gas, interest on a home mortgage. You could take depreciation expense if you wanted to. And so that's the home office deduction. Then you can do auto. So if you're a mobile notary and you're driving around, then you can use the auto deduction. You could take what's called the mileage method or the actual method. We can come back to that later if you'd like. Cell phone, I would say, you're on your cell phone all the time as a mobile notary. And so you could use a good chunk of your cell phone bill, and then home internet as well. You need the internet to provide your services. And so a big chunk of your home internet bill should be written off. So those are sort of like the personal expenses that can now be converted to business now that you've established a business. So if there's any of those four that you want to unpack a little bit, we can. If not, we could move on to the next step.
I think I mean, it all makes sense. I've been doing my home office and everything like that. And then for some of the, like, I log it when I do work for if I ever have to do a mobile or anything like that. But
Yeah.
um, yeah, yeah, I think.
Yeah, and then a plug going back to the QuickBooks Online is
Mhm.
like they have a mileage tracker built into that monthly subscription. So you download that app and it'll track you. Maybe you like that, maybe you don't like that idea, but it will track you and you can then distinguish if these miles are personal or business miles. I was going to say then the other ones, right? If we covered those four, the other ones are like I would call them the basics. So things like meals and traveling.
Mhm.
So I should mention this because a mobile notary job or career is kind of a lonely one in which like you don't have other employees and stuff like this. It should be noted that meals by yourself are really never tax deductible unless you are traveling for business. And when I say traveling for business, I don't mean like traveling within your local city, but I mean like taking a business trip to attend a conference in a different state, for example. So while you're traveling for business, going to the conference in this example, you can deduct your meals. Your meals are generally 50% deductible. But if you're just running around because you've got 5 notaries coming up within the next few hours, you didn't grab anything to eat, and you want to stop by Starbucks, that meal that you're having by yourself is not deductible at all.
Okay, no, that makes sense. But like I can tell that you know about the whole notary process because not many people know that like there's a that feeling of running around to 5 different notarizations and then be like, I forgot food or anything like that.
Yeah.
So yeah,
Yeah.
yeah.
So then I guess moving along the spectrum of tax strategies, the next ones sort of involve what you mentioned before. So like hiring your minor children is one of those things you can do. Yeah, I mean, you can hire your adult children as well, but hiring your minor children is the most sort of beneficial to you from a tax savings perspective. So what you're doing here is in general, I would say age 7 is like the minimum you want to do this. You're probably not hiring, your
2-year-old.
newborn or
Yeah.
your 5-year-old in your business.
Yeah.
But as they get older, like as they progress from age 7 all the way to 17, their
Mhm.
duties and responsibilities can increase in time, and their income, the amount you pay them, can also increase. But essentially, how this works is rather than you, the parent, buy things for your child using after tax money, which is how you've done it your whole entire life prior to being a business owner,
Yeah.
why not do it using sort of pre-tax money? Meaning, why not get a tax deduction for it? So we won't go into like the meat of the strategy and how you do each little step, but basically, you're shifting income from your business to your child, and because your child is likely making less than the standard deduction, your child pays no income tax. So in the scenario where you were in, let's just say, let's call it a 25% tax bracket, which doesn't exist, but let's say across all taxes, you pay an average of 25% in taxes. You save 25%, and your child picks up that income and doesn't have to pay income tax on their tax return. In fact, your minor child may not even need to file a tax return. Your viewers are going to have questions about that for sure. So let me add one more sentence to that. And that is
Okay.
any person who makes less than this standard deduction does not have to file a tax return. And I can't recall off the top of my head what the standard deduction is for 2024. It might be 13,850 or something slightly higher than that.
Mhm. So basically, if just correct me if I'm wrong. So like for the whole entire year, if you make less than that amount, you don't have to file for taxes. Is that right?
Right. Yeah. You don't have to file an income tax return. It's
Okay.
nuanced. Like technically, if you made that money operating a business and
Mhm.
that income was subject to self-employment tax, well, yeah, you didn't have to file an income tax return, but
Okay.
you do owe self-employment tax. So that forces you to file a return.
Okay.
What the listener should understand from this is like for your minor child, if they receive essentially around 13,000 or less in income, they don't have to file a tax return or pay income tax. A little disclosure here though is like if you're in a state that has state income tax, please check that your state's standard deduction is as high as the federal. Some states will do the exact same dollar amount as what the federal standard deduction is. Others will say like, hey, it's great that the Fed's giving you, roughly $14,000 as a standard deduction. We're only going to give you 2,500. So if you pay your child over 2,500, you're going to have to file a state tax return on that money.
Okay, that makes sense. Yeah. So I mean, cover all your bases. Make sure that
Yeah.
you're looking because nobody wants to get in trouble with
Yeah.
that.
Now let's throw some like more fuel on this particular strategy. So
Okay.
it's one thing to save 25%, right? That's essentially what we're saying here is that 25% tax deduction to you, your kid is not picking it up on their income taxes. But even further, now your minor child has what's called earned income. And
Hmm.
because your minor child has earned income, they can now establish their own Roth IRA for themselves. So start to think about what's happening here. A 7-year-old might be contributing, I don't know, let's call it $100 a month to a Roth IRA. And as they get older and older and start making more money in the business, are contributing to their retirement account, prior to them even getting into their teens. And you don't have to do much if you will just let time do its thing by compounding. If you start at age, let's say 10, and you want to retire at age 60, you've got 50 years of compounding working for you. So I've done the math on this before. I don't know what it is, but I don't, or off the top of my head at least, but
Hmm.
like if you do like $1,000 a year or something like that, like your kid will be a millionaire even if you never increased more than $1,000 a year in their retirement. Meaning they didn't even like save for themselves. Like it was
Yeah.
just $1,000 per year every year from age 7 to 65 or whatever you want to call it. But anyway, it's pretty amazing strategy.
So, okay. And then that's amazing because even if you did, so the ones that I was looking into is like a 529B, and that is taxed if you don't use that for college, which I didn't necessarily like because, you know,
You never know.
not everybody's gonna go
Could
to
be a
college.
future
So,
YouTube star.
yeah, yeah, they could be, or a notary. Like you don't have to have a college education.
Exactly. Yeah.
Yeah, it's mandatory for everybody to become notaries in my family. Yeah, so no, that's amazing because all of the things that I don't know. I don't know why I never even thought about that as far as for an investment account.
You're not a tax professional, so it's okay. I mean, and don't take it as an insult either. I'm
No,
just
no,
saying, like,
that's
these are
good.
not things that the average entrepreneur is thinking about, which is why it's important to like work with a tax pro who's like thinking about these strategies and being your advocate so that you can implement all these things, even if your business is just, starting.
Yeah, because I mean that sounds amazing. I mean, I think pretty much everyone wants to set their kid up for as much benefit as they could, even, when the parent isn't always going to be necessarily there. So
Right.
that's amazing.
And
I'm
another question that comes up on this is like, okay, Navi, well, I just started my business. I do have minor children. They're old enough to help me with some stuff like, I don't know, stuffing envelopes or some social media marketing or cleaning up my home office. But like, I need that money. Like, I can't just give it to them. Well, I'm not saying that the money just has to sit there in a savings account
Mhm,
for them all the time. Like, we discussed the IRA thing. That's an option. If you put the money in the Roth IRA, well, you're not really going to touch it. But if it's just in like a regular checking or savings account for your minor child, then use that money that's in there to pay for all the stuff you were going to buy for them anyway, like their school supplies and clothing and shoes and all that stuff, right?
mhm,
So don't just think about it as like, oh, I'm going to get a deduction and save myself 25% and then give this to money to my child and then I can't touch it. Well,
mhm,
no, if you need that money, then go ahead and buy the things you normally would, or make your child buy those things that they normally would, and teach them the value of a dollar. Hey, you did
mhm.
this work, you earned this amount of money. Now you want those shoes? Okay, well, there goes all the money you just worked for the month because your shoes cost X amount of dollars.
Yeah. No, that's a really good whole entire concept because I had been in finance for 10 years, but I never really thought about doing that as far as like 401k and everything like that because
Yeah,
I was more into the 529Bs or like investment accounts in different ways. So that's I'm so glad that you brought that up.
you're welcome.
So thank you. Thank you.
Now, we mentioned travel a moment ago.
Mhm,
So, yeah, people know that, yes, if I attend a conference, I can deduct my airfare and things like this. But again, thinking strategically, maybe it makes sense for your spouse to be on your board of advisors. So, assuming you have an LLC, you've established an operating agreement. In your operating agreement, there might be a sentence or two related to board of advisors that have been established. And I'm not trying to be like tongue in cheek here or cheeky or anything like that, but like if it just so happens that your best friend is on your board of advisors or your spouse is on your board of advisors, then if there's like a business reason for them to be traveling to this conference with you, which might be in, I don't know, Vegas or Orlando and Disney World or whatever, like their stuff is a write off too, right? Let's say let's say they know nothing about notary, but
mhm.
they're great at marketing. Well, bring your marketing person with you to learn strategies related to marketing and things like this. And so both of you can get a tax deduction related to it.
That is also
Okay,
interesting.
check that box, Katie. So we're going to be hiring your kids. You're getting Roth IRAs, and
Yeah.
we're going to get a board of advisors for your spouse. Okay. What else is Katie going to get out of this?
I don't know, I don't know.
I know I'm teasing, of course, but I
Yeah,
want
yeah.
all the listeners to be thinking about these strategies and incorporating them within their business.
Yeah, no, I'm really glad that you brought that up because there's a lot of stuff that, like, if you don't know, you don't know to ask, or like you don't
Yeah,
even know how to research. Like, if no one had, if I hadn't heard of that, how would I know to look up that type of stuff?
yeah. And
Um,
along those lines, if I may, I did, and this might come up later, but like it's kind of coming up naturally right now. I love what you said. I know it's a cliche term, like you don't know what you don't know.
Mhm.
And that hurts you, right? Because not knowing that in years one, two, three, four, five, and learning about it in year six is great, you know. But then what's going to happen? Like hindsight's going to kick in, right? And you're going to be like, man, I wish I knew about this in year one. And so what I'm getting at with here is like, I did establish a course for new entrepreneurs who are like, hey, I'm just starting out. I don't have the money to hire someone like Navi so that he can work on my books full time and do my monthly bookkeeping and have these tax strategy conversations with me. Well, the reason why I created the course is essentially for new entrepreneurs just like that. I basically cloned myself and put myself in this course. And so there's like over 11 hours of video content in there where you
Mhm.
can follow with me step by step. Like I'm not just a talking head, speaking to you for 11 hours. You can see my screen. You see where I click in QuickBooks to do this particular strategy. I don't
Mhm.
want to ramble too much about it, but essentially, I'm taking you from not knowing anything about taxes and
Yeah.
turning you into a tax strategist who can implement all of these strategies on their own, do their own bookkeeping on their own, and essentially not just save themselves money in taxes, but save themselves the cost of paying someone $500 a month to be doing these services for you.
Mhm. No, that I think that's great. I continually take courses all the time because I like to have a sense of almost control where it's like I know that what I'm doing is correct and I don't have to really depend on necessarily
Yeah.
someone else. So, or at least have the knowledge so that way I can ask the right questions or stuff like
Exactly. I've had a lot of entrepreneurs take the course and then decide after a few months or maybe their business is taking off, say, okay, now I need to go hire someone, but
that.
I'm
Hmm.
going to use all these strategies I learned in Navi's course to vet the person I'm going to hire to do this service for me. Because if they don't know what Navi knows, then they're probably not a good fit for, my, like, to be my accountant or CPA.
Yeah. And so, to that point, do you take on new clients or do you usually mostly recommend the course and then do you have other people that you recommend? Or,
I think if you're a brand new entrepreneur and you have time on your side, meaning like, hey, I'm not so busy with clients that I don't have time to learn this.
Mhm.
At that point, I think go for the course route because it's going to teach you everything you need, allow you to implement it, and you'll save a bunch of money. If you're in a different bucket and you're like, hey, I figured out the money game. I'm making, six figures plus, and it's more beneficial to me to keep producing my services than to spend 11 hours in a course and learn it for myself. Then you can decide to hire someone if you wish. To answer your question more directly, depending on the time that you're watching this video, I may or may not be taking on new clients. I'm not sure. I could tell you at the exact moment when we're recording this, I'm currently not. But if you're watching this in the future, a plug back to our YouTube videos and why you should do YouTube videos is we're creating this content and it maybe get played in, 2 years from now. So
Mhm.
at that time, I may or may not be taking clients. Just go to my website. It'll tell you if I am or not. It's navimarajcpa.com, and you can learn there whether I am or not. I will tell you this. If you go on that site and you fill out the contact form, whether I'm going to be able to assist you or not, I will get you referred over to someone who knows these strategies and that person can help you. So don't feel like, oh man, I really want to work with Navi. It's cool if I'm not taking clients at the time. Contact me and I will get you the right person to help you with your taxes.
Okay, perfect. Yeah, that was my
Yeah.
original. Yeah, perfect. Good. Well, thank you so much. So you let us know how we can best contact you and everything like that. And then we'll link your YouTube as well because it is a excellent resource. I was looking over some of the different things as far as tax strategies and everything. So definitely check
Yeah.
out.
And there's even more stuff that we didn't even get a chance to talk about today that's not just in the course, but also, viewers should know. So I'll just rifle some of those things off. So if they pique your interest, have a look at the course or my YouTube channel or someone else. Just Google it. I don't care. It's not that I don't care, but if it's not me, that's fine. I just want you to get help by someone. And so
Mhm.
there's other strategies related to healthcare. There's health savings accounts, health reimbursement arrangements. So if you've got a child with special needs or autism or some other braces, even, right? LASIK eye surgery, you can get tax deductions for all these things. Also, we didn't talk about retirement in depth. There's solo 401ks and things called mega backdoor Roth IRAs. I know that's a mouthful, but there are ways to get over $69,000 in Roth money into a retirement account in a single year if you're a business owner. So there's much more strategies than you and I could talk about on, like, a 30 or 40-minute call. I just
Mhm.
want your clients to know that, or the viewers to know that there's tons of more stuff that we didn't discuss about today,
Yeah.
and that you need to educate yourself about, or have someone or hire someone that can educate you about these things.
Okay. Yeah, definitely. Because I already know off the top of my head a couple different people that would benefit just from some of the stuff that you said. So definitely thank you for coming on. I really, really appreciate it. I'm glad that we reconnected and you reached out originally and replied to a very new notary that had no idea what I was doing. So I appreciate that.
Absolutely. You're welcome, Katie.